Hey, it's downtown Josh Brown. I am live from the compound with my friend Perth Tolle. Perth, say hello.
Hello.
Okay. So Perth is here to talk about the launch of her brand new ETF, something that's taking her years to get off the ground. And now it's here. Everyone's very excited about it. We'll get into that and more. Stick around. All right. So first of all, congratulations.
Thank you.
I'm so proud of you.
Thank you.
And just before we even talk about ETFs, let me just indemnify everyone in the room, everyone in the building. None of this is financial advice. Nobody is soliciting you. Nobody's telling you to buy or sell any securities. Is there anything else we're supposed to say?
No,
Okay.
This is not a recommendation.
Okay, good. So, but let's talk about freedom. Is that what you're calling it? I know the ticker is FRDM.
It is FRDM.
Okay.
Yes. And now that we set the ticker, now I can't post this on my Twitter, but that's okay.
All right, fine. I'll post it on my Twitter.
Okay.
Look, how about we'll beep out the ticker? I won't use the ticker, but basically what you've done is you've said, I believe that there's a better way to invest in global country stock markets. And that better way is to overweight the companies that actually promote freedom for their citizens.
Yes.
And to underweight bad actors, countries that are repressive or have a lot of corruption or have human rights abuses. So that seems like common sense that the countries that treat their citizens well will have better stock markets.
Yeah.
Why isn't that obvious to everyone?
So you actually wrote about this in your post called, Rule of Law and Stock Markets.
Yeah.
So if you look up Josh Brown, Rule of Law and Stock Markets, you'll see that post. It's a great post, and it basically lays out the entire our premise. So the premise is that freer markets do perform more sustainably. They use their economic and human capital more efficiently, and they recover from drawdowns more quickly than the unfree markets. But we created this to be more of a differentiated exposure in emerging markets. So most emerging markets indexes are 30 to 35% China. So that's if you look at MSCI, FTSE, S&P, they're all like 32 to 33%
Because why?
China.
They're market cap weighted.
They're market cap weighted, exactly. Okay. So you end up with a lot in a very concentrated position in a very unfree market with a lot of geopolitical risk. There's about 70% in Asia in those indices. So this is a very different exposure because it has no China, no Russia, no Egypt, no Saudi Arabia. And we're not picking on those countries. We're using objective third-party quantitative metrics.
Let's talk about that. Let's back up a little bit. So to start with, you created the Life and Liberty indexes.
Yeah, so Life and Liberty Indexes is my company. Right. And the index that this fund is based on is the Freedom 100 Emerging Markets Index.
Okay, so we can legally say the Life and Liberty indexes without mentioning a product.
We can talk about the index.
All right, fine. Can you imagine what?
I know.
All right, fine. So the Life and Liberty indexes, though, so you've got a data provider that helped you quantify which countries are more free. Is that the right way to say it?
Exactly.
And which are more repressive. And then from there, you said, okay, if we wanted to weight based on this factor, these are the countries that an emerging market index should have more of. So what are those countries?
So in the index currently, the highest weightings are in Taiwan, South Korea, Chile, and Poland. Okay. Poland used to be number 1 holding back in 2017, but then it dropped to number 4 in 2018.
Didn't they just elect some psycho hard right guy there?
Yeah, because of a lot of the problems with the independence of the judiciary and the basically stepping over of democratic norms in that country, it has dropped from number 1 to number 4, but it's still one of the freer countries. So no country is completely 100% free. So these are just freer than their peers.
Okay.
So you just have to be relatively freer than the other emerging markets.
Right. It's right. It's not like we're talking about every country being like Sweden.
Right.
It's just it's never going to be that way, or not in our lifetime. This is a relative game.
And it's emerging markets. So
right. And it's emerging markets. Yeah. So they're young. Their experience with democracy is a younger experience.
Exactly.
So it's not a judgment of the people that live there. It's just like, where are they in which state of development are they in?
Correct. And their institutions and their governance, mostly their governments are more in control of human freedoms and economic freedoms. That's why we do the the freedom screens on the country level and not on the security level.
Okay.
Yeah.
So Perth, since I met you 3 years ago, 5 years ago, I don't know.
I think it was 2 or 3 years ago. Yeah.
Okay, it all bleeds together for me. But since I've met you, like you have been so passionate about building this thing, like starting with the index and then saying, I want to make it so that people can invest based on this premise.
Yeah.
Like you've really killed yourself to get this done, and now it's here. Like,
Yeah.
But you don't, obviously now you have to attract capital to it. So it's
Right.
like, in some respects, your work has only just begun.
Correct.
But you're working with my friend Wes Gray
That's
and the
right.
team at Alpha Architects.
Alpha
Shout out to
Architects.
Wes. What did Alpha Architects provide you with in order for you to be able to launch this platform or
Yeah.
this fund?
So first, they were my biggest mentors for about a year. Wes helped me to
And Jack and like these
Yes.
guys. These guys have done this.
yes. So they already have 5 ETFs. So they've been here and they helped me to start the process of building the infrastructure to launch this thing on my own.
Right.
And then towards the end of the process, when I was getting ready to basically launch it as Life and Liberty Investments, Wes was like, you know what, it would be cheaper for you, and if you just launched it with us. We have the economies of scale.
Okay.
So they're providing they're the issuer. They're providing the back end operations infrastructure and running the actual fund. So they're doing the trading. They're doing all the back end operations
So
to run the fund.
they're like iShares in that regard,
Yes.
and you're somebody that brought. So you come with the intellectual capital,
with the index.
the idea, the index, but then they push the fund out so that it
Yeah.
can be invested in.
This is the most ridiculous way that Wes puts it, but basically they're the PIMCO to my research affiliates, which is ridiculous to say. But
So you're the Rob Arnott
Correct.
of this project, and
Yeah.
they're the PIMCO. All right, listen, whatever it is, because like you're
that's
not
a
going to.
ridiculous example.
Yeah, but you're not going to build an ETF issuer from scratch for one unproven fund.
Yeah.
That would be even more ridiculous.
True.
And now you get to be aligned with Wes, who
Yeah.
is an absolute unbelievable businessman, all-around person. Like that's the right guy to have in your
they're
corner.
the real freedom fighters. They were
really
actually in Iraq fighting for freedom, like people shooting at them and stuff. So they're the literal freedom fighters.
Right.
So perfect partners for this.
Okay.
Yeah.
And now you have a lot of people in the industry that like have your back. Like you have a lot of
Yes.
people that both formally and informally. So
Yes.
Batnick and I are informally like your advisors.
Thank you.
We haven't signed any pieces of paper. We just love what you're doing.
And you're
we're-
unpaid.
Well, but but we don't want to be paid. Like we believe in the concept and we want to see
Yeah.
you succeed. So
Thank you. I
that's-
appreciate that.
is
No,
that
you
good
guys
enough?
have been my biggest promoters and just mentors, and I so appreciate that.
Okay. So now you got this thing on the market, and we can't mention the ticker, and we're going to bleep out the early.
You can mention the ticker. I just can't retweet you.
Yeah, but that's silly. I want you
Okay.
to be able to. I want you to be able to talk about your thing.
Okay, so let's just stick to the index then.
Okay.
Yeah.
So you've got this thing out there.
Yeah.
Now, you have to talk to financial advisors because that's who allocates funds.
Yes.
And it's impossible to reach 1 million individual investors who
Yes.
each are going to put $1,000 in. Like you'll never go. So you have to get big allocators to be on board. So
I
how do
have
you
to
do
be
that?
more strategic in how I market and how I do my basically presentations and getting the word out in a scalable way. So especially as a smaller indexer, we have to really focus on the scalable things. That's why we do a little more media. We have guys like you to kind of be out there helping us promote. We have a lot of, like you said, champions in the industry, and I really appreciate that. Just people have resonated with this idea in a way that I am constantly floored by, and that never goes away.
Well,
And
you shouldn't be because your intentions are great and people recognize how authentic you are, and you shouldn't be floored.
Thank you.
People should. All right. The last thing I want to ask you,
Yeah.
the trade tensions with China, the fact that there are now threats that China might screw with Apple or China might crack down on or the U.S. might crack down on Chinese companies listing on the New York Stock Exchange.
Mm-hmm.
Does that tension help your story or your fund story? Or is it only really semi-related? Like what?
so it is part of the story. So China is always a big part of our story just because it has such a huge allocation in the other indexes and has none in ours currently. I hope they make it into the index one day. I love China and it's my home country, and I hope they make it into the index one day. But they just have some improvements to make. The rhetoric is there. Like they have all the right trade rhetoric, like free trade, globalization. Our methodology does treat trade as international trade is good. Anything that impedes international trade is bad. So if we were to impose tariffs on China, that is actually bad for the U.S. If they retaliate, that is bad for China. So yeah, all of
Quantitatively bad.
Quantitative,
like in your scoring
in
model,
our scoring
it'll
model,
be bad
yes.
for both parties.
And this is not our scoring model. Again, it's the Fraser Institute, the Cato Institute, and the Friedrich Naumann Foundation that we use. So with permission, and those guys are, you'll meet them tomorrow at our appreciation event.
All right,
So
very cool.
so yeah, so it would score them lower if the trade, if there's more tariffs or non-tariff trade barriers, anything like that would score them lower on the economic freedom side. So, but China also has the human freedom side that's more problematic as far as their scoring. So, so yeah, the trade war stuff does bring attention to, hey, there's some risk here. And yeah, that does help us. Any kind of China news brings us into
so
the
China is
mix.
not the only EM country, though, that is going to have a lower weighting in your index.
Right.
Because of things like human rights, or like Saudi Arabia, I think is smaller in yours.
Saudi Arabia, we don't have any allocation to.
None.
So Saudi Arabia is being added to MSCI currently,
But not yours.
but not ours. Right.
Okay, so that's a big differentiator.
Yeah.
And Saudi Arabia is trying to do both things at once.
Yeah.
They're trying to keep the monarchy, but then also float a giant listing for the oil company in Western countries. Are they going to be able to thread that needle, or what?
I don't know. You see a lot of these emerging markets like Saudi Arabia and China trying to do two things at once, where, on the one hand, they're trying to open up as far as reforms. On the other hand, they have still some repressive practices politically. So they're both kind of doing both things at once. We'll see which side wins out internally in those countries. And I hope, for the best, and I hope they, both make it into the index.
Okay, the last thing I want to know, is there a cap on how big any country can get in the index?
There's not currently, because if you look at the MSCI, the FTSE, and the S&P, there's 33 to 35% in China. So, we don't have anything that big. Our biggest holding is 21% in Taiwan. So yeah, that's big enough, I think, as
Could
it is.
Taiwan go to 40%?
With this
Do you have rules that would stop
algorithm, we don't have a cap. But with this algorithm, it's very difficult for one country to get to that level. If it did, then I think we would impose a cap. We don't have to currently.
But also, that country could cross over and become officially like a developed market.
Right. It could be, it could be promoted into a totally different index. Yeah.
Right. Okay. Well, listen, I want to wish you all the best of luck. I've been watching you hustle to get this done all these years, and it's finally here, and I couldn't be more excited for you.
Thank
and
you.
I hope the reception for the product is huge. I hope people say, I want emerging markets, but I don't feel good about investing in some of these terrible places where they don't treat people right. And this is like an alternative, and I hope there's a big audience for that. So
That's the idea. Thank you
right.
so much for your part in this.
All the best of luck. How do you want people to follow you? Where can they?
So the index website is lifeandlibertyindexes.com.
Okay.
And I'm on Twitter at Perth_Tolle, and
Okay.
I'm on LinkedIn.
And
as
we
Perth Tolle.
before investing in any ETF, read the prospectus, know what you're doing,
Yes.
consult a financial advisor if you are unequipped to make decisions about what to buy and sell. And thanks again for being on.
Thank you.
All right.